What I can envision existing alongside the current financial institutions is something resembling a Ripple-style platform, currency-agnostic, peer-to-peer, and designed to facilitate low-cost payment transfers. In straightforward terms, it's the type of system where everyday consumers can circumvent those old-school money transfer services and their frustrating service charges. That $10 transfer fee everyone's gotten used to paying. In a world equipped with modern financial rails, it starts to feel like an outdated relic from another era. With a network like Ripple, the concept is that you'd be capable of sending value anywhere across the globe for very, very low cost, close to frictionless compared to what people have been conditioned to accept as normal. And that's precisely why I keep returning to this marriage concept, this idea of coexistence. The legacy banking system on the consumer-facing front end and a new innovative payments layer running alongside it on the back-end infrastructure. I wanted to conclude on an optimistic note. Don't they make a lovely couple together? Because the vision that was articulated years ago by a St. Louis Federal Reserve voice like David Andolfado has just moved one significant step closer to feeling less theoretical and more practical, especially after what was just announced regarding the Federal Reserve leadership and who is slated to assume the chair position announced by President Donald Trump. Because the real story isn't just about who this person is on paper, but what this individual has publicly stated about cryptocurrency and who originally opened their eyes to the entire industry. Here's the angle we're exploring in depth today. The person who helped enlighten him about crypto was Marc Andreessen. And Andreessen Horowitz, better known as A16Z, was one of the earliest institutional investors in OpenCoin, which eventually became Ripple Labs. And the claim being made here is that Ripple isn't just destined to work with private financial institutions. It's strategically positioned to work with central banks as well on a global scale. If that scenario happens, you're talking about tectonic shifts in how value moves internationally, how settlement happens between institutions, and how monetary policy and payments infrastructure might collide in a brand new way that reshapes everything. Quick note before we dive deeper, if you want to take this kind of research and turn it into an actionable investment plan, check out the 100X Club membership. You'll get the XRP Millionaire Blueprint, exclusive weekly stock alerts for high potential opportunities, and a simple systematic framework to learn to grow your wealth without all the noise and confusion. It's all in the pinned comment below. Now, if you haven't seen the original clip I referenced earlier, it goes back to 2014. It's where this whole coexistence idea is laid out clearly and explicitly. The traditional institutions remain in place, but a Ripple-like payment platform runs alongside them simultaneously. Currency-agnostic, peer-to-peer architecture, and optimized for speed and cost efficiency. It's basically the blueprint for a hybrid financial world. Old structures don't instantly vanish overnight, but a new rail quietly does the heavy lifting behind the scenes where consumers never even see it working. Fast forward to today, and the announcement being circulated reads like this. Trump says he's nominating Kevin Warsh to be chairman of the Board of Governors of the Federal Reserve System. The biographical background being recited is impressive on paper by any standard. Hoover Institution Fellow, Stanford Graduate School of Business faculty, legal background from Harvard Law School, economics training from Stanford University, experience in global economic forums, and private sector ties through managing a major family office. The narrative being pushed is this isn't just another bureaucrat or academic. This is someone who genuinely understands markets, monetary policy mechanisms, and global economic systems. Then you zoom in on the component that makes crypto people pay very close attention. Ties, direct or indirect, to circles that have historically intersected with fintech infrastructure, faster payments initiatives, and central bank modernization efforts. And yes, that includes the Bank of England angle people discuss frequently and the broader faster payments ecosystem where names and networks overlap more than most people realize or acknowledge. We're told Kevin Warsh became the youngest Fed governor at the time of his appointment, served from 2006 to 2011, represented the Federal Reserve in G20 contexts, and was an emissary of sorts to key economies, especially in Asian markets. Before that role, he was inside the White House National Economic Council during a critical period, and earlier still, he worked in mergers and acquisitions at Morgan Stanley. In short, his career sits right at the junction where monetary policy meets financial markets meets international coordination. But the real point of focus here is what he has publicly stated about cryptocurrency, because the stance matters enormously. Is it framed as an existential threat to the Federal Reserve System, or is it framed as something that can coexist, guide, discipline, and even improve how decision makers operate? In the clip that's circulating, the question is essentially, you referenced Bitcoin in your remarks. Was that condescension? Some people argue it undermines the Fed's ability to manage the economy effectively. Does Bitcoin make you nervous? And his response is the part that jumps off the page and demands attention. He states clearly, Bitcoin does not make him nervous. He describes a dinner back in 2011 where someone, another guest from the same broader technology network, showed him the original Bitcoin white paper. He strongly implies it was Marc Andreessen, even if he plays coy about names at first for diplomatic reasons. And then he says something that's genuinely revealing about his mindset. He wishes he had understood as clearly then how transformative Bitcoin and the underlying technology would ultimately be. From there, he frames Bitcoin as an important asset class, something that can inform policymakers when they're doing things right or wrong economically, not as a substitute for the dollar, but as a kind of market signal, a policeman, a market-based feedback mechanism that provides real-time information. And whether you agree with that framing or not, it's not the tone of someone who wants to ban it, ridicule it, or pretend it's irrelevant to the future. It's the tone of someone who sees it as a pressure gauge for monetary policy. Then he pivots to the deeper philosophical point about technology. The underlying technology is just software, new powerful software that can accomplish things we couldn't do before technologically. Can it be used for good and evil purposes? Yes, like all software throughout history. But he doesn't default to moral panic or regulatory fear. He leans into American competitiveness. These technologies are being built here in the United States. The world's most talented engineers come to the United States specifically to build them here. And by building them here domestically, he argues, the U.S. has a unique opportunity to be more productive economically and create something special over the next decade. That line specifically, create something very special over the next decade, is the tell that reveals his thinking. Because if you believe the next decade's financial infrastructure is being rebuilt in real time right now, then the question becomes who is shaping it, who is funding it, and who has proximity to the levers of power that matter. This is where Marc Andreessen comes back into the picture in an important way, because the story isn't just crypto is interesting to tech people. The story being suggested is the same kinds of people who helped pioneer the internet era during the 1990s were early on the digital money era too, recognizing the pattern. Andreessen Horowitz is A16Z, and the investment lineage around OpenCoin and Ripple included major venture capital players from the very beginning. Andreessen Horowitz, Google Ventures, Lightspeed Venture Partners, Founders Fund, names that show up again and again in the biggest technology waves and inflection points. And when you trace those networks carefully, you start seeing recurring dinner conversations, recurring introductions, recurring talent pipelines moving between the same organizations. For example, there's this parallel claim floating around that Peter Thiel taught Brad Garlinghouse about cryptocurrency concepts, and that Garlinghouse ended up at Ripple, leading the company. Then you have this clip where Warsh credits Marc Andreessen as the person who showed him the Bitcoin white paper at that 2011 dinner. The pattern being implied is a small circle of highly connected people repeatedly seeding the same ideas into the same decision-making strata of society. Now let me be careful and precise here. People often take these overlaps and jump to conclusions, sometimes way too far into speculation. You'll hear speculation that all successful technology companies come from the same group of individuals with hidden agendas. And sometimes people go even further, mentioning military or three-letter agency involvement in crypto origins. That's a serious claim, and unless there's hard public evidence tied to specific actions and documents, it should be treated as speculation, not established fact. But the broader point that influential networks exist, that capital concentrates around informed insiders, and that policy and technology often intersect behind closed doors away from public view, that part is not controversial whatsoever. That's how power tends to work throughout history. Then the script zooms into an old piece of media coverage about OpenCoin launching Ripple, positioning it as a digital currency protocol and a tool set for facilitating transactions across currencies, including Bitcoin. The pitch is simple and compelling. You can send email for free globally, but not payments. And Ripple's promise was to move finance closer to what email did for communication infrastructure: fast, global, low cost. Chris Larsen is quoted with that core transformative idea. Communication got democratized through the internet. Now payments are catching up to that same level. Lightspeed's Jeremy Liu is included in that early narrative as well, describing how Ripple's protocol architecture aimed to keep the advantages of math-based currencies while addressing their practical drawbacks. Basically trying to make the system practical, usable for real businesses, and durable for long-term adoption. And once those early venture capital names are in the frame, the argument becomes these aren't random, disconnected bets on interesting technology. These are coordinated, informed bets by people who understand how infrastructure changes happen at a systemic level. Now we take it one step further into the institutional connections. The claim is that the Federal Reserve has been discussing Ripple since 2014 publicly, and that various faster payments initiatives and personnel movements reinforce the impression of an ecosystem forming around similar technology. Ken Montgomery gets mentioned as someone associated with faster payments development who later went on to work at Ripple, and that service providers in the faster payment sphere have professional connections that appear to converge around similar technological rails. If you're watching this with a skeptical eye, you might say, okay, so what? It's just normal career movement in a specialized field. Smart people go where the opportunity is and where their expertise is valued. That's fair and reasonable. But if you're watching it with a pattern recognition eye, you might ask a different question. Why do the same names keep popping up at the exact intersections where new payment rails meet old institutional structures? And that's the heart of the thesis being pushed here, that what's unfolding isn't accidental or random. That Trump, whatever you think of him politically, might be playing a role in reshaping the monetary order globally, ushering in a new international system where digital assets and distributed ledger technology underpin settlement infrastructure and value transfer between nations. It sounds speculative on first listen, but the argument is, when there are too many coincidences and things line up too neatly across multiple domains, it's worth asking whether we're seeing randomness or deliberate design. To be clear, you don't have to believe in grand conspiracies to believe in coordinated interests among powerful groups. Powerful institutions plan strategically, investors coordinate capital deployment, governments and central banks modernize infrastructure, technology replaces outdated rails. That's history playing out. The only real debate is about pace, transparency, and who benefits first from these transitions. So when you hear a would-be Fed chair saying Bitcoin doesn't make him nervous, framing it as a policy signal rather than an existential threat, and crediting an elite tech investor with showing him the white paper back in 2011, it's not hard to see why crypto people sit up and listen carefully. Because it's not just a casual comment about an asset class, it's a comment about a technological wave and whether the people steering the monetary system see that wave as an enemy to be destroyed or a tool to be utilized. And if the coexistence model is real, if traditional institutions remain while a Ripple-like layer handles low-cost global transfer in the background infrastructure, then what you get is not a sudden overthrow or revolution. You get a gradual migration, a quiet upgrade, a system where consumers and businesses slowly stop paying legacy fees because the alternative is simply better and more efficient. That's the lovely couple idea, again from the beginning. The old world doesn't need to burn down overnight in chaos. It just needs to be outcompeted one transaction at a time at the margin. Let me add some additional context about why this matters more than just crypto speculation or hopeful thinking. The faster payments movement has been building for over a decade globally. Countries like the UK, Singapore, and India have already implemented real-time payment systems that operate 24/7. The US has been slower to adopt, but the Federal Reserve launched FedNow in 2023, which is their instant payment service. The question is, what role does blockchain technology play in this ecosystem? Traditional faster payment systems still operate on centralized rails with trusted intermediaries. They're faster than the old systems, but they're not fundamentally different architecturally. Ripple's value proposition has always been about using distributed ledger technology to enable even more efficient settlement, especially across borders where traditional correspondent banking creates multiple layers of intermediaries and delays. This is where the marriage concept becomes practical rather than theoretical. Central banks don't need to abandon their existing infrastructure completely. They can integrate blockchain-based settlement layers for specific use cases where the technology provides clear advantages. Cross-border payments, security settlement, interbank transfers. The consumer never sees the difference on the front end. They just experience faster, cheaper transactions. This is already happening in limited pilots globally. The Monetary Authority of Singapore has been testing Project Ubin for years. The Bank of England has been researching RTGS renewal with distributed ledger technology. The European Central Bank has explored wholesale CBDC concepts. These aren't fringe experiments. These are serious central banks exploring how new technology can improve their core functions. The Warsh nomination matters in this context because it signals how the most powerful central bank in the world might approach these questions. If the Fed chair views Bitcoin and blockchain technology as informative market signals rather than threats, if he's been exposed to these ideas since 2011 by some of the smartest people in tech, if he believes America should lead in building these systems, that creates a very different environment than hostile regulation. Now let's address the network effects and connections more directly. The venture capital world is small at the highest levels. A16Z, Google Ventures, Lightspeed, Founders Fund. These firms invest across multiple waves of technology. They were early in social media, cloud computing, mobile, and yes, cryptocurrency. The same partners often serve on multiple boards, attend the same conferences, invest in each other's funds. This isn't conspiracy. This is how elite networks function in any industry. What makes it interesting is when those networks intersect with government power. Mark Andreessen showing the Bitcoin white paper to a sitting Fed governor in 2011 is a perfect example. That's not public policy making. That's informal influence through social connections. And it matters because ideas spread through networks before they become policy. The people who get exposed to new concepts early have time to think through implications, build conviction, and position themselves accordingly. By the time these ideas reach public debate, the influential insiders have already formed their views. The Peter Thiel and Brad Garlinghouse connection, if true, follows the same pattern. Thiel was an early Bitcoin advocate and PayPal founder who understood digital payments deeply. Garlinghouse became CEO of Ripple and has been one of crypto's most effective communicators to traditional finance. These aren't random connections. These are talent pipelines and idea transmission networks that shape how innovation diffuses through society. The question is whether this represents healthy innovation ecosystems or concerning concentration of power. Probably both simultaneously. Now let's talk about what coexistence actually looks like in practice. Imagine you want to send money from the US to the Philippines. Today, that might go through Western Union or a bank wire. Multiple intermediaries, currency conversions, fees at each step, days to settle. In a coexistence model, your bank's front-end interface looks the same. You enter the recipient, the amount, click send, but on the back end, instead of correspondent banking, the transaction routes through a blockchain-based settlement layer. Currency conversion happens through liquidity pools or market makers using XRP or another bridge asset. Settlement is near instantaneous. Fees are a fraction of traditional costs. The recipient's bank in the Philippines receives the funds in pesos within seconds. From the consumer perspective, money transfer just got better. From the bank's perspective, they reduced operational costs and improved customer satisfaction. From the blockchain network's perspective, they facilitated real economic value transfer and earned transaction fees. That's the lovely couple. Legacy banks maintain customer relationships and regulatory compliance. New payment rails provide superior infrastructure. Neither completely replaces the other, but the combination is better than either alone. This model doesn't require banks to become crypto experts overnight. It doesn't require consumers to understand blockchain. It just requires the infrastructure to work reliably and cost-effectively. And that's what Ripple has been building toward for over a decade. The central bank angle takes this further. If major central banks adopt blockchain technology for wholesale settlement between institutions, it legitimizes the entire space. It proves the technology works at scale for mission-critical financial infrastructure. It creates standards that private sector implementations can build around, and it potentially positions certain blockchain networks as critical infrastructure for the global financial system. That's why the Warsh comments about building something special over the next decade are so interesting. What does the Fed chair envision that something special being? Is it just gradual modernization of existing systems, or is it fundamental restructuring of how money moves globally using new technology rails? We won't know for certain until we see actions, not just words. But the fact that someone with these views and connections is being nominated tells you the conversation has shifted. 5 years ago, this nomination would have been impossible. The idea of a Fed chair who doesn't view Bitcoin as a threat would have been laughable. Now it's happening, and the crypto industry is celebrating while traditional finance is cautiously optimistic. Let's also address the timeline and what actually needs to happen for this vision to materialize. Central banks move slowly by design. They prioritize stability over innovation. Even if Warsh becomes chair with pro-crypto views, transforming Fed infrastructure takes years of testing, regulatory work, and political consensus building. This isn't something that happens in 2026. This is a decade-long project if it happens at all. But the direction of travel matters more than the pace. If the trajectory is toward integration rather than opposition, that changes investment theses, business strategies, and talent allocation across the entire industry. Companies like Ripple go from being speculative bets on disruption to potential infrastructure partners for the world's most powerful institutions. That's a completely different risk-reward profile. It's why understanding these connections and conversations matters for anyone thinking seriously about where crypto goes next. The 2014 Federal Reserve commentary about Ripple is worth revisiting in this context. When central bank researchers and officials start publicly discussing private sector blockchain projects, it indicates serious interest, not casual awareness. These institutions don't waste time analyzing technologies they view as irrelevant. They study what might impact their core functions. The fact that Ripple specifically has been in these conversations for over a decade suggests something beyond typical fintech hype cycles. The personnel movements between Faster Payments initiatives and Ripple strengthen this impression. When people with deep expertise in payment systems and central bank operations choose to work at a crypto company, they're making a bet on where the industry is headed. They're not leaving stable careers for speculation. They're positioning themselves at what they believe will be the center of financial infrastructure evolution. Whether they're correct remains to be seen, but their choices reveal informed insider perspectives. So what should you do with this information? First, understand that this is about long-term infrastructure transformation, not short-term price speculation. Second, recognize that regulatory clarity and institutional adoption are the actual catalysts that matter, not social media hype. Third, pay attention to who gets appointed to key positions and what they've said about crypto historically. Fourth, watch for pilots, partnerships, and actual implementation announcements from central banks and major financial institutions. And fifth, maintain healthy skepticism while staying open to the possibility that major changes are coming. The challenge is distinguishing between wishful thinking and genuine shifts in power structures. Not everything is a conspiracy, but not everything is random either. The truth usually lies somewhere in between. Powerful people with aligned interests making coordinated moves that benefit themselves while potentially transforming systems. That's all from me today. Make your own mind up about these connections. Connect the dots yourself. Challenge the assumptions I've presented and keep your eyes on what people do, not just what they say publicly. If you want to go deeper into this analysis and turn research into action, join the 100X Club for the XRP Millionaire Blueprint, exclusive weekly stock alerts for high potential opportunities, and a step-by-step approach to grow your wealth systematically. It's in the pinned comment below. And if you got value from this breakdown, hit that like button, subscribe to the channel for more analysis, and I'll see you in the next video.